Hi, so this is module on derivative analytics. As the name suggests, derivative analytics is essentially analyzing the derivatives. Now my name is Vivek Bajaj and I've been trading in market for almost 15 years now. And let me confess that derivative analytics has been one of the most important research tool for me in understanding the market and also in increasing the probability of success in the market. Now I have been able to survive the market ups and downs, and the evolution of derivative market has given us immense opportunity in building good business base for us. Now derivative analytics is such a fantastic tool. If you do it properly alongside other research areas, this will certainly increase the probability of success for you. In this module, I'm going to focus more on practical. I'm going to introduce you to an Excel sheet, and we're going to start from zero base and help you to draw that Excel sheet so that it becomes your friend for life in analyzing your stocks or commodities or whatever instrument you are trading in, and help you to take a better decision with respect to your trades in the market. Now let's get it going. So before we actually go to the derivative analytics part and know the various parameters which is used to do the derivative analytics, it's important for us to understand what are the different ways of research. Now I'm sure you must have gone through different modules before this particular module, or you know a bit about all the other modules which we are going to talk about. So there are two forms of research which everyone knows, right? The fundamental research and the technical research. Now fundamental research is understanding the macro and the micro factors affecting an instrument. So when you talk about factors and an instrument, so there are various instruments which will eventually affect the price of that instrument, right? Now let's take an example of Nifty. Now if I ask you what are the macro factors that affect the Nifty movement, you would say the financial performance of corporates in our country, right? You would also say the socio-economic condition in our country, the demographic profile of our country. You would also say the overall financial economics of our country, the overall balance sheet of our government, right? So these are various macro factors that affect the market. When I ask you the micro factors that affect the market, you should answer the movement of currency in India. You should answer what global markets are doing. You should answer the immediate events that will affect the market, and that can be an election result, that can be a credit policy announcement by the government, or that can be anything which has an extremely micro impact on the prices of the instrument. Now fundamental is essentially you collect all the data, all the factors that affect the market. At any point of time, which factor is actually very, very important? Because not all factors will be important at all point of time, right? There may be a situation where crude oil becomes an extremely important factor. But after 2-3 months, crude may not become an important factor. Maybe a political scenario can become an important factor. So you list down all the fundamental factors that can affect an instrument. You give weightage to those factors at that moment of trade, and then you take a call based on fundamental research. So all these factors are given weightage, and a cumulative value of an instrument, which is the fair value of that instrument, is decided. And if that instrument is undervalued, you buy, and if that instrument is overvalued, you sell that instrument, right? So essentially fundamental is nothing but arriving at a fair value of an instrument. What is technical research? Technical is essentially try to find out what other people believe market is going to do. So technical, if you have gone through the module, you know that it relies more on the behavioral part of the market. It relies more on the crowd part of the market, where assumption is if the market has been behaving in a particular manner, there is a pattern, and you can predict the future based on the current pattern, right? And the pattern can be graphically plotted in technical, or the pattern can be derived from the pure quantitative numbers in the form of various technical indicators. The third effective form of research, which complements the other two forms of research, I will not say that You can purely make money out of derivative research, but as a value added tool to your fundamental and technical, it will give you a better probability to succeed in the market. So the third is, which is derivative research, which talks about how do you track what other people are doing in the market. So you know what is market? Market is essentially a bunch of bigger guys with a lot of resources and a bunch of guys who would like to follow them and see what they are doing so that they can effectively follow them much effectively. So derivative analytics help you to evaluate what the bigger guys are doing in the market. So obviously if you buy a stock or if you take a position in the market, you can only earn money in that position if there are other people who also follow you and the price goes up or goes down. So standalone, if you just buy and no one really know about that position or not many people are following that position, you will essentially not make money in the market because you are kind of handling a standalone position in the market. So it's important to follow a position which other people also believe, yes, that is going to happen in the market. So how do you evaluate what other people are believing right now is called derivative analytics. Am I clear? Yeah? So let's move on. So let us know the parameters which will help us in evaluating what other people understand about the market. So the most important, the most critical parameter of understanding derivative market is the Bhav copy. Now Bhav copy, as the name suggests, it talks about the complete Bhav or the complete price action in the market with respect to the complete market, right? Now Bhav copy comes from the traditional pit trading session where there used to be a Bhav book where all the Bhav of the stocks were written. In today's electronic world, Bhav copy stands for a complete, exhaustive market data related to whatever has happened in the market as on today. We are going to decode the Bhav copy and we are going to understand how do you analyze a Bhav copy. Because for anyone who wants to get into the market, the basic primitive thing of getting into the market is to understand the Bhav copy. Then you have other parameters which are technical in nature. For example, open interest, volumes and delivery, relationship between open interest, price and delivery. What is premium and discount and how premium and discount can help you in making some judgment about the market. Rollover statistics and how rollover helps you to make a judgment on a particular instrument. FII or FPIs in today's parlance. People who are resourceful and who bring a lot of money into the Indian market. What are they doing right now? And can that trend get affected in the price of the instrument? The Max Pain range theory or the put call ratio. These are two important options oriented data points which will help you to understand what the guys who have significant positions in the options market are believing the underlying is going to do. And based on their position, you can define a range or you can define a probable action in the underlying. Because options player will always try to defend their positions in the market. Right? Sounds interesting, isn't it? So we're going to take each and every pattern each and every parameters in detail and decode them and try to create a framework so that you can understand the market in a more sensible manner and you can complement your technical and fundamental research with the derivative research. Okay?